Hello, everyone, and welcome to the show. My name is Chris Alamo, and I am an amateur investor. This podcast is my open source journal of everything I learn about investing and wealth management. I'm here to explore the key concepts, market dynamics, and investing strategies that will assist you on the path towards financial independence and financial literacy. My mission is to build us from amateurs to experts. All suggestions are my own, and I recommend that you should do your own research before taking any investment advice. See you in this week's episode. I hope you enjoy. All right. How's it going, everyone? A little bit of a hiatus from the amateur investors, but this is episode 77 with Tyler Campbell and Tom Honzik of Unchained Capital. Tom, Tyler, thank you so much for joining me tonight.
Yeah, thanks, Chris, for inviting us on. I'm looking forward to this conversation.
I'm looking forward to it as well. Before we get started, get into it, Tom and Tyler, I'd love to see, tell me a little bit about how you got into Bitcoin, what your journey was like. We can start with you first, Tom.
Cool. Yeah, I got into Bitcoin in 2020 following the pandemic and kind of the bull run there. I would say my story started before then, though. Growing up during the Great Recession of 2008, 2009. I was in grade school at the time, and I think my teachers did a pretty good job of kind of explaining the issues that were going on, and that kind of instilled in me a distrust for the banking system, the fiat system. That kind of got me interested in like precious metals, gold and silver, a few years later as I got into college and stuff. And then started taking Bitcoin seriously just a couple years ago and really fell down the rabbit hole then.
Yeah, Tyler, how about you? I'd love to hear your story.
Yeah, of course. So first of all, thank you for having us on. This is awesome. Always love to talk about Bitcoin and self-custody, especially at a time like this. My Bitcoin journey was just a little bit before Tom. Really, that 2017 bull run that kind of encaptivated so many of us. It was just like, hey, everything's going up, so might as well like enter the quote unquote crypto space. And I had just come out of university, had just come out of graduate school at the University of Minnesota. Had a job actually, and I'm repenting for my blockchain sins here, but I actually got a job out of grad school with an enterprise blockchain company. So whatever that means, we'll put it aside. But I was, infatuated with all this stuff, had some disposable income for the first time to actually throw at some investments, and really got caught up in the 2017 wave. It was only after that in 2018 when the first crash happened. We all went all the way down to about 3,500 or so, and Bitcoin didn't die, and that really kind of led me down this whole interesting path of like, okay, I work for this blockchain company, but everywhere we go, all the other countries we go to, whenever we talk about blockchain, people ask me about Bitcoin. Why is that? Why is Bitcoin the household name, and why didn't it die during this crash? And that's what led me down this the proverbial rabbit hole, right, of learning about the technicals, the underlying monetary policy behind Bitcoin. I do come from an economics background, both in undergraduate and graduate school, so I had to really unwind all the Keynesian economics that I'd been exposed to in school, and kind of restart from an Austrian foundation. So all of that culminated into me eventually leaving that blockchain job, and working towards the mission of people holding their own private keys.
Yeah, that's awesome. I'm very similar to you, Tom. I was class of 2020 as well. I actually did hear about Bitcoin, I guess in 2010 or 2011, but like most people kind of scoffed at it, like thought nothing of it. I remember my dad hearing about the Bitcoin pizza. He's like, yeah, this like magic internet money this guy sent over the internet, and he got like 2 pizzas in return. He's like, should I put like, a grand or 10 grand in? And I said like, nah, like, it's never going to go anywhere, of course. And my dad, even if I said yes, knowing my dad, he's very risk adverse. He's like, it's a risk I'm not willing to take. So, I don't kick myself, but it is one of those things like, what if we did throw money in it? We'd be much better off, at least financially. But you never want to sell your Bitcoin. So there's that. And then I thank a lot of the 2017, 2018 Bitcoin maxis that helped me in 2020 basically avoid or navigate shitcoins personally. I had ETH for like a couple of weeks, but we don't need to get into that. I was bummed at myself, but I guess everyone's got to, dabble in it briefly. And then I got rid of it very quickly. And I've been all in Bitcoin basically ever since. So obviously, you guys at Unchained, before we get into that, obviously the craziness of this week of FTX and Sam Bankman-Fried of everything that was going on. I haven't had an episode in a couple months, so I don't know if one of you guys want to take it, or I can jump in here to basically what happened with FTX. Tom or Tyler, I'll open up to the floor if either of you guys want to explain to the audience what happened with FTX and Sam Bankman-Fried. Tyler, you want to take it first?
Yeah, I can take it. I've listened to the saga a couple times now. I really don't try to embed myself in shitcoin affairs. The crypto casinos haven't been for me for quite some time. But the most eloquent description of the entire situation was really, I think, recounted very well by Lynn Alden on Peter McCormack's What Bitcoin Did podcast just recently. I feel like a couple days ago. And stuff is still coming out, right? Like, if you're following this stuff on Twitter, there's new screenshots of DMs and all this stuff that was going down. But fundamentally, what I think the core issue was individuals were marketed a product to where they could go and trade and earn yield and all of these fancy things. And at the end of the day, it was not only a Ponzi scheme and like the literal, the Ponzi scheme definition of the word, but also kind of a Ponzi scheme that then had a casino embedded into it as well, right? And it was just all of these things where you have an offshore exchange that's marketing to, FTX US was also, that's what the US customers were exposed to. But people didn't hear FTX US. They saw FTX. They saw the branding and the Super Bowl commercials and the celebrities. And it gets the masses really excited to go to FTX and engage in these activities where all is fun and games for a while. You can trade Donald Trump coin, and there was perpetual swaps and things like that. It was really, I think, quote unquote, fun for a lot of people to engage in until you get to the scale where you have individuals putting there's families' hard-earned savings, trusting it with this third party that, at the end of the day turned out to be basically a nothing burger, right? They were lending out or allegedly lending out funds to their partner research firm in Alameda Research to potentially, put customer funds at risk to try to earn a yield. It was just from top to bottom. The most incredible part to me about this entire situation is the lack of due diligence from not only people in the cryptocurrency industry, but also traditional venture capitalist firms, right? You had the premier names in Silicon Valley, the likes of Sequoia, right, would go and there's screenshots of they're drooling over the founder and this is amazing, but there was no board of directors at FTX, right? They were given money at such a quick pace with a lack of due diligence that I think is just astounding. So that's where I'll stop. That's what I've gathered from all these podcasts. But yeah, allegedly, I guess, until we see the lawyers go through everything, but just incredibly, I guess, disheartening. And I feel bad for anybody caught up in that.
Yeah, Tom, anything else you want to add to that?
Not too much. I would say, yeah, at the bottom line, basically, people entrusted their money with FTX buying these crypto assets that are not FDIC insured. And so, you make that mistake. And then when the crypto asset isn't there anymore, then you don't really have any recourse. So that's a big reason why people need to hold their own keys and stick to Bitcoin.
Yeah, I completely agree. I think you guys did a pretty succinct analysis of it. And I think that's why many Bitcoiners, even Bitcoin maxis, and many people call, we always say, not your keys, not your coins. So that kind of leads me in perfectly into what you guys do. So obviously there's many different setups. You can do a single sig setup, self-custody by yourself. You can do a multi-sig setup by yourself, or by yourself. And then this kind of goes into Unchained. So maybe I'll start with Tom. If you want to say what Unchained does and the collaborative multi-sig and how it coordinates and kind of has a good mix of basically using hand helping or white glove service from a company while also kind of having your own keys yourself. So if you want to explain it, and then we'll have Tyler add anything else in the back end.
Sounds good. Yeah, Unchained is a Bitcoin only, Bitcoin native financial service company. We have a few products, but the one that we're most familiar with, Tyler and I, is the Vaults product, which is where people hold two keys to a vault. They hold their own keys to their own Bitcoin vault. Unchained Capital holds a third key, and there's always two keys that are required to be able to move Bitcoin out of that vault. So because Unchained only has one key, it's impossible for Unchained Capital to, mess around with people's funds. And ultimately, each client has full spending power over their Bitcoin. The reason why someone might want to use Unchained and build a vault with us is because Tyler and I and some other members of our team, we're experts at getting it all set up and answering people's questions, making sure that people are really comfortable and confident with that setup. We've onboarded all types of people, ladies in their 80s, for sure. Got them all set up with their Bitcoin keys. And that's really the only way to really make sure you still have your Bitcoin for the long term. Especially that multi-sig structure as well offers a lot of advantages over single sig. And maybe I can turn it over to Tyler to talk some more about that as well.
Yeah, definitely. That'd be great. Tyler, yeah, if anything you want to add.
Yeah, absolutely. Tom did a fantastic overview. It's really, we have an entire team of experts here to help, right? I think the biggest thing when you're talking about self-custody in general, single sig, meaning just one private key, one seed phrase controlling your funds, generated by a hardware wallet. These are kind of terms that people are more and more familiar with in crypto and Bitcoin specifically. When it comes to like actually using single signature private keys, one hardware wallet, one seed phrase, that in and of itself is a single point of failure, right? You could lose that seed phrase. You don't want to be your own worst enemy in that respect. And when you introduce multi-sig, which might sound complicated, in the beginning, when you really drill down to it, there's an entire team of experts here to help you set this up. And we do so with kind of this thought in mind of, we want to get rid of those single points of failure, right? If you do lose a seed phrase or lose a device, right, one of those hardware wallets, it's not going to be the end of the world. And we have a team here to help you with that. So to Tom's point, it can be an older generation. It could be a software engineer right out of college, right? Multi-sig, self-custody, holding your own Bitcoin keys is for everyone. There's no reason at all that your Bitcoin, your portion of 21 million, needs to be secured by a trusted third party fully. There is no reason for that, right? Now, there are varying degrees of technicality and specifics, and that might turn a lot of people away when they first come to the space. But I think we need to make this, especially this situation with FTX, and now this is coming off a summer where we saw stuff happen in June and July that was much the same. We need to now turn this corner and think, hey, self-custody is no longer super technical, super intimidating for the average Joe, but it's actually just a phone call away. And so really, as much as we can get that messaging out there, I think, that's our mission heading into 2023. That's for sure.
Definitely. And correct me if I'm wrong. I think I've heard Parker Lewis say this, at least on a couple podcasts or stuff. I guess you guys can correct me if I'm wrong, but you guys, assuming you have two different devices, let's say one's a cold card and one's a seed signer, and then you have the seed phrase of either 12 or 24 word backups for both of those. So you have 4 pieces, both devices and both seed phrases. Your family, let's just say I were to pass away and I was going to give them, or they were my beneficiaries to my Bitcoin, they could lose 75% of those. So 2 devices and a seed phrase, 2 seed phrases and a device, any combination of that, and they would still be able to recover it with their seed phrase or device, and then the one that you guys self-custody. Is that correct? Normally in a traditional 2 of 3 multi-sig?
I would say directionally that's correct. When you get into the specifics of hardware wallets, right now our platform does support Ledger, Trezor, and cold card devices. So something as well, seed signers, I have one over there on my desk, are really awesome. Those are the 3 kind of brands of hardware wallet that we support at the moment. More to come in the future, but that's kind of the cornerstone of where we're at right now. But to your point, aside from the device specifically, your point's exactly correct. The scary thing though is like that if you lose 75% of everything and you just have a device remaining, that's to me, you do a firmware update, you plug it in, and there's water damage and stuff like that. So having that seed phrase, and that's why we really harp on operational security, separating those elements of your setup as best as possible. We really want to just avoid that single point of failure. But Tom, yeah, anything to add there?
Not really. Yeah, just keep one of the seed phrases with a family member that isn't notorious for losing things. And then, yeah, if God forbid something were to happen to you, then that family member can work with Unchained Capital, and we have the expertise to recover the Bitcoin, pass it on to your heirs. So that's a big reason that even a lot of people who already know how to set up multi-sig, they actually want to use Unchained Capital anyway, because if they just set it up all by themselves, then if something happened to them, maybe their family is not going to be technical enough to recover that Bitcoin. So
yeah. No, I think that's great. I know you make a great point, like giving it to a family member. I know my mom is horrible with keys, so I would not tell her their keys. I was like, just keep this safe. And I was like, they're not keys. Don't think private keys. But all joking aside, there was a Twitter Spaces this morning that actually Bitcoin Magazine and a couple of my colleagues were in. It seemed to kind of be a heated debate of like, some people say self-custody is difficult. Some people say it's easy. Some people say it's somewhere in between. Some people, basically the debate was, it's not easy enough versus, if you consider it very difficult, then you shouldn't hold Bitcoin at all. And it's like, well, then you don't get the benefits of holding Bitcoin, or you have to trust a custodian, like exactly what we just saw with FTX. So I guess I'd love to see where your perspectives are, both working at Unchained and basically helping people with multi-sig custody. Do you think it's easier? What do you think as potentially, maybe this is just a futuristic approach, but what do you think a way to make it easier is, or is this kind of the best it's going to be? And maybe just using simpler devices might get it better. I don't know. I can pass it over to Tyler if you have any ideas.
Yeah, it's I think for some reason there's kind of this thought out there that as soon as you write down your seed phrase, maybe it's going to jump up and bite you or something. Like it's really Phil Geiger said this today on Tales from the Crypt podcast, right? It's like if you can write down a 12-item grocery list and keep that secure, you are holding what you need to hold in terms of private key material for your Bitcoin, right? So I think at the core of that thought process, it's kind of this maybe subconscious leaning towards getting, avoiding personal responsibility. And we really need to return to that, right? We have the world's hardest money, the best money ever created in humanity. With that, people should have a little bit of personal responsibility. Now, we can say that it's not that hard, but I see it with individuals I work with, and I'm sure Tom would say the same. It is a little bit intimidating at first, but I think a path forward to make it less intimidating is one, working with a dedicated team of individuals that are there to assist you, right? If you have Bitcoin wealth and you want to secure it on your own keys, there are teams of people to help you. So that's one. And then two, getting your hands dirty with it, right? It doesn't mean just by writing down a seed phrase, that doesn't mean all of your wealth is then transported to your Bitcoin addresses and you control them. You can set up one hardware wallet, make the move to multi-sig, send $10 worth of Bitcoin to your multi-sig address and get the feel for it. It doesn't need to be all or nothing. So you should do that. And then when the time comes and there's blood in the water, there's these exchanges going down, there's kind of this meltdown, you can rest assured feeling confident that, hey, earlier this summer, I played around with my own keys. I felt comfortable with it. That's where my Bitcoin is. So now instead of worrying and scrolling Twitter, I can maybe, eat some popcorn and scroll Twitter, or go tell my friends and family to also do the same, because you do get confidence. And then there can be that network effect of you teaching others.
Yeah, taking baby steps, just whatever you need to do to get comfortable. Like Tyler pointed out, you can set up a key, you can set up 2 keys, you can set up a vault, and it's not attached to any of your wealth yet, right? And then you can move $10 worth of Bitcoin in. You can watch it sit there for 2 weeks and notice that it hasn't gone anywhere, and then maybe move $200 worth of Bitcoin, and then more and more until you really feel comfortable, and that you keep learning along the way. Make sure that you understand what's really going on behind the scenes and why no one else can mess around with this money, this Bitcoin, when it's in this structure.
Yeah, and I love what you guys do. A fan of yours. I don't use the product myself, but I do really like what Unchained's doing, and definitely think it's a valuable business. But I guess this is not to call you guys or anything, but with everything, the likes of FTX collapsing, even the most trustworthy, or at least even the VCs believing in it, and all of Main Street and Wall Street, if God forbid Unchained were to go under, is there still a way to recover without the use of your key? Obviously, I think we would need two seed phrases or 2 devices or something like that. How would a person go through recovering if, God forbid, Unchained Capital were to go out of business for any reason, or be told by a government entity that they weren't allowed to help their clients?
Tom, you can take this one, and I'll add anything else.
Okay, yeah. So Unchained is built in a way so that we are not a single point of failure either. We were very intentional with that. We really want clients to understand that they have no single points of failure when they put their Bitcoin in a vault with Unchained. Part of the vault building process that we walk people through all the time is that once you build your vault, in multisig, there is a special file. It's called a wallet configuration file. And it's kind of like a blueprint talking about all the keys that were involved, all the information that you need to know about how the vault was put together. And as long as you have that blueprint, and you can store it many different places if you wanted to, but as long as you have that blueprint and you have your 2 keys, then Unchained Capital could completely disappear, and you would have the tools to recover your Bitcoin. It's important to understand that your vault, your multi-sig vault, it's not hosted on Unchained Capital servers. That's not where it lives. That's not where the Bitcoin is. It is a wallet on the blockchain, which is decentralized around the world on the internet. So all Unchained.com is doing is it's providing like an interface for you to view your vault and interact with it in a convenient manner. But if Unchained.com wasn't there anymore, you could always use that wallet configuration file to open up your vault in another interface. And as long as you had your 2 keys, you could move Bitcoin around as well.
Yeah, and that's, the power for you to take that blueprint, that wallet configuration file, go over to Caravan or Sparrow Wallet or Electrum and rebuild your multi-sig setup in the event that Unchained, is not there. We call it a doomsday scenario. That it just cannot be overstated. I do think that, and that's true for our other financial services, right? If you're using a Bitcoin IRA with an Unchained IRA and you have retirement funds that you hold the keys to, I don't know of any single retirement structure where you can go sovereignly recover it using a different interface. That's just something that we're not exposed to in legacy financial systems. With Unchained, Bitcoin-backed loans, right? There's even a wallet configuration file for your loan address, because our loans are built on top of this foundation of multisig as well, where our clients hold a key, we hold a key, and then we have a third-party key agent in Kingdom Trust, and they hold a key. So in the scenario where you're still kind of, you don't trust Unchained, you want to be able to see if your Bitcoin is still there and that we're not rehypothecating it. Well, one, you can actually just check your collateral address on the blockchain, verify it with your own node. You can even grab the wallet configuration file and build it for yourself in Sparrow or Caravan. So I do think that, it's this paradox where the more we allow our clientele not to have to trust us, in turn, that builds more trust, right? Because we're talking about these things, we're trying to educate individuals on these topics. So yeah, but everything Tom pointed out was absolutely perfect.
Yeah, and I think that's some great stuff about the blueprints and the breakdown of all of that. I guess, correct me if I'm wrong, is the blueprint like the master configuration of it? Are derivation paths subsets below that? So basically, the blueprint is all of it, and then the derivation paths of each one of the wallets, and then that's backed by the seed phrases. I know we're getting a little technical here and in the weeds, but I guess correct me if I'm wrong, or is the blueprint basically a master derivation?
Yeah, so that wallet configuration file, that blueprint, or Phil Geiger on our team kind of coined or made the analogy as that file's like a treasure map to your Bitcoin multi-sig treasure chest. That file itself contains the derivation paths for all of your public keys. It contains the XPubs, or the extended public keys of all of the keys in your setup. So in a 2 of 3 multi-sig setup, which is what our Unchained vaults are, there's the extended public keys for 3 of the keys in that file, along with the derivation paths of your keys, and then the unique wallet fingerprint for your individual private key. Then there's some other technical information like the quorum size, and that you want to be on mainnet and not testnet and those sorts of things. But the cool thing is, in the Unchained platform, you can actually view that information before you download that file, just so you can kind of get a better sense of what that file itself contains.
That's awesome. I guess that actually leads very well into my next question. So you brought up that you also offer loans aside from doing the custodial service. Obviously, we've seen Bitcoin take a bath along with basically every other asset class, aside from maybe real estate starting to finally turn over, but basically everything else getting hammered right now. So as the collateral or the price of Bitcoin goes down, how do you guys prevent people getting liquidated? Do you guys do over collateralized loans, or I guess how does if someone want to take a loan against their Bitcoin? I know someone made the joke like, you're down 75% now, maybe now is a good time to take a loan against it. I still think we have further to fall potentially, maybe not much further, but I'd love to, if you guys can explain the loans. Tom, maybe if you want to start.
Yeah, our loans are definitely over collateralized. We make that a requirement. Quite a bit over collateralized. I don't know if I could give you the exact numbers. Maybe Tyler can for the minimum requirement, but as the price fluctuates, you know, the value of the collateral denominated in dollars, the value of the Bitcoin can go down. And so, you know, we have a loan ops team, a loan operations team that is very proactive, reaching out to clients, making sure that they're aware of the situation that they're in, and working through the decisions that they have. You know, you can add more collateral if you want. You can sell some of the collateral to get into a better position. And you can pay back the loan quicker than you had planned. So we have a lot of different approaches, and we just work with clients to decide what is best for them.
Yeah, it's really, you know, I think when you're talking about a Bitcoin backed loan, you're talking about the best collateral, the most premium collateral that is available out there, right? So you know, it's my philosophy, and I think it's a philosophy of a majority of our clients. Like, you know, just because it's kind of the Jurassic Park saying, right? Like, just because you can doesn't mean you should, right? You need to be intentional about needing to use this financial service. Now, Bitcoin and its premium collateral capability does allow you to borrow against it, right? So you don't have to sell your Bitcoin and incur capital gains penalties and stuff like that. But, you know, it needs to be very intentional, right? Consolidating debt, putting a down payment on a house, these kind of large life changes. I think that's more of what we see in terms of our lending clients. But again, significantly over collateralizing at a 250% collateral to principal ratio. So that's a 40% loan to value. And really, you know, we want to be attentive during margin calls and accelerated margin calls. And it's our goal to be over communicative with our clients so they can shore up their collateral by depositing more Bitcoin or selling some principal. You know, it's our goal that our clients are always in the know and then safe with their loans. So you look at it right off the bat, if you're kind of into DeFi lending and things like that, interest rates might be a little bit higher than normal. The kind of the conservative nature of that 250% collateral to principal might be more conservative than you might see elsewhere. But it's really because, you know, friends don't let friends lose Bitcoin, right? And that's kind of our ethos.
Yeah, I think, I mean, in all the craziness of clown world, as I call it, I think that's probably the truer cost of capital, or the loan rates of what they should be. Obviously, when you can print unlimited money, you can, and the Federal Reserve can peg interest rates at 0 interest rates. You know, wonky things happen. Europe, I mean, for many years was having negative yielding interest rates, very minimal negative yielding interest rates, but leaving money in a bank, you're actually losing money by doing so, which is just absurd. So I mean, I think we've hit a lot of great points in here. I guess I'd love for you guys to describe to my audience why Bitcoin and not crypto. I've given my answer countless times on this, but I always love asking Bitcoiners to give your 90-second or 60-second elevator pitch of Bitcoin and not crypto. I guess was going to ask this question before the FTX stuff happened, so we can disregard that, or maybe even if you want to avoid that altogether. Tyler, I'll let you go first if you'd like.
Yeah, it's I think that, you know, why Bitcoin, not crypto? And this is the question that I think, like it or not, we're going to be answering for a long time for folks. But you know, you have this money that was built on a foundation of energy and scarcity, right? There's energy that goes in to create this thing that's kind of, there's no way to describe it really, that it's hard to make analogies to it. But what you do know is that there's a hard cap supply. There's 21 million Bitcoin that will ever exist, or Phil Geiger, I guess, would argue that the 21 million already do exist via the nature of the code and Bitcoin's monetary policy. But when you have that as your foundation, and you really value the decentralization of the network, when you understand the fundamentals of, okay, what do Bitcoin nodes do? How is Bitcoin mined? What is the supply schedule? You kind of combine these elements of cryptography, computer science, and then monetary economics to realize that there's only going to ever be 21 million of these things, and I get to have some of that 21 million. Well, now I'm going to save in Bitcoin, right? I'm going to protect and secure my Bitcoin. And when you think about other cryptocurrencies that ride the coattails of what Bitcoin is, it's centralized teams that release a token project, right? There's a pre-mine that goes to the founders of these teams and their limited partners that kind of get in early. It's very much so different than Bitcoin in the way and the reasons why Bitcoin was started. But it doesn't appear that way to the normal retail investor, right? There are a lot of individuals out there that haven't done that proof of work of kind of appreciating Bitcoin for what it is and maybe getting burned once or twice, but they get to see a marketing landing page for XYZ token, and all they see is dollar number go up. To steal a quote from Phil Geiger, I think he just said it today on Marty Bent's Tales from the Crypt. When your life is dollars, when you're thinking about dollars, and when you're out to earn dollars, it's very hard to see that the dollar is failing. And so when you get into Bitcoin and you actually study Bitcoin and you go through those periods of maybe you keep funds on an exchange and you get burned, or you decide to gamble on a crypto token and it goes to zero, that should strengthen your resolve and as to why Bitcoin's here and why you should save in it. So when we talk about Bitcoin versus crypto, I think without going into as long of a spiel, like on Thanksgiving dinner, I guess this is a good test for that. I think I'm going to draw pretty much in the 21 million, right? And if you could find me an asset as hard as Bitcoin, as decentralized as Bitcoin, then maybe we can engage in a deeper discussion, but there isn't one.
I definitely got to check out this Phil Geiger podcast. I follow Phil on
amazing.
Twitter. He has some great stuff. And I do listen to Tales from Crypt from the time to time. There's just so many great podcasts. So I don't always get to it. But Tom, I'll kick it over to you. So why Bitcoin and not crypto?
Yeah, at a technical level, the reason why Bitcoin is superior money versus the other 10 to 100,000 cryptocurrencies that have been invented is that it's an irrefutable fact that there are more people running Bitcoin nodes around the world than any other cryptocurrency. And nodes might seem a little bit technical to someone who's newer to Bitcoin, but that's really what makes any of this decentralized. It's just people running computers that run the Bitcoin code and communicate with each other so that there's not a central computer that is processing everyone's transactions. It's also very easy for anyone to run a node versus a lot of these other cryptocurrencies where it's not. So that keeps Bitcoin in that number one position. At a less technical level, my elevator pitch would kind of be along the lines of because Bitcoin is so decentralized, it makes it very hard to ever change the rules of Bitcoin. So when you have Bitcoin, you have certainty. We know what Bitcoin is going to look like 5 years from now, 10 years from now, 100 years from now. We know what the supply of Bitcoin is going to look like. It's going to keep approaching that 20 million cap. And you can audit the supply of Bitcoin that is out there right now that has already been mined. You compare that to like the second biggest cryptocurrency, Ethereum, and you have none of that. You can't audit the current supply. You don't know what Ethereum is going to look like 5 years from now because 5 years ago, right, it looked totally different. There are people, a small group of people that are making the rules and changing them how they see fit. So yeah, if you want certainty for your money, which most people should, and I would guess that most governments or corporations that want to dip their toe into the crypto space, they probably want certainty too. So Bitcoin is really the only answer to that.
Yeah. And just to dunk on Ethereum real quick. I mean, I love to do it and I could do it for always. And, it's so easy to do, but I know that they just removed the ability to remove, they removed on the roadmap to withdraw staked ETH. So they used to say, oh no, 2023, 2024, and now it's not even on the roadmap. So, you may never be able to unlock your ETH ever again. And then also, I mean, right now they did the merge, which was to try and fork off and go to proof of stake. Right now, over 51% of the blocks are OFAC compliant, meaning that they are censoring transactions. So, try being a Russian citizen or Iranian citizen or a citizen of a country that's just on a list, and you can no longer use your money. So it's the equivalent of having your bank account confiscated, which obviously Bitcoin usurps. So just love to dunk on them.
Wait, Chris, I thought crypto was the future of money and decentralized, and was rules without rulers. What are you talking about?
I've also heard it's ultrasound money, but I mean, if
Right.
you can't move anything or you can't do anything, I don't really think that's the future people want. Maybe that's the future governments or like authoritarian governments would love, but that's not the future that I want or I see for my future children. All right, I'll kick it over to Tom. So right now we're down what, 75%, 76% relative to the high of like 69K in Bitcoin. What are we at? Like I just checked today, like 16.4 or 16.5, so around the 16K range. What would you just say to someone that you just said, hey, Bitcoin, but not crypto, but I am taking a bath right now in terms of US dollar purchasing power? So Tom, I'll kick it over to you first. Like, what do they do at this moment in time?
Well, I think, if you have the right conviction in Bitcoin, you use this opportunity to acquire more. But if you don't have the right conviction in Bitcoin, then, you don't want your entire net worth in Bitcoin just yet. You do want to be kind of responsible, with how you're allocating your money. I have a very high conviction in Bitcoin, and I see these cycles where, there's an underlying steady adoption of Bitcoin that just, is kind of a straight line upwards. But then really a lot of the volume of buying and selling of Bitcoin is just these people that are trading it, trying to make a dollar profit. They don't really understand Bitcoin. They don't understand. They haven't asked like what is money. They haven't asked that question and really dived into that. So they're just using Bitcoin as a trading tool. And so you get these very volatile bull markets and bear markets. But you just zoom out, you look at a 4-year plus time frame, and pretty much anyone that has held Bitcoin for that long has been rewarded by the underlying adoption. You get higher highs and you get higher lows each time. And I expect that to continue because more and more people are being pushed towards Bitcoin because they see the advantages it has as a monetary tool over other crypto, over fiat, over gold. It really just is the best tool that's out there.
Yeah, I'll ask the same question to you, Tyler. Your friends coming to you or calling you, or your parents are like, hey, we're down 75, 80%. What the hell's going on? Is this dead? What do we do?
Yeah, I think similar to Tom's answer, and I guess I'll expand on it a little bit, is you can send resources, right? I love to send Parker Lewis's Gradually Then Suddenly
Great,
series.
yeah, great reference for sure.
Just fantastic. Bitcoin is the great definancialization. That's a great article in particular out of that series. But thinking about the kind of the way Paul Tudor Jones, like Stanley Druckenmiller, these larger asset allocators, kind of when like their shock and awe moment when they come to Bitcoin. Maybe some of them have changed tune recently. Maybe they were investors in FTX, who knows? But what really kind of struck a chord with them was when they made their large allocations was, okay, this holder base, pretty much, for the lack of a better word, religious about this thing, are bought into the 21 million mission, right? The decentralization that underlies the network. So if you're taking a bath on this, if you're down 75% in US dollar terms, it would really benefit you to kind of study the larger macroeconomic environment surrounding the dollar right now. Again, it's hard to see that the dollar is falling apart when your world is dollars, and juxtapose that with so HODL waves, right? This UTXO age distribution where you can see on chain that there are individuals who have been holding Bitcoin for years and years and years. And those bands of individuals are getting longer and longer, and they're widening out, meaning that individuals who have been in the space for a while, who have been invested in Bitcoin for a while, are not selling their Bitcoin to get more dollars. And that speaks volumes. Now, on-chain metrics aren't perfect. The HODL waves aren't perfect. I send Bitcoin to Tom today. That's a UTXO that's moving, but I'm a hardcore hodler. So take it with a grain of salt. But the general trend and the general theme is that, okay, these individuals who are all in on Bitcoin, who are saving in Bitcoin, are not reversing course, right? Individuals who are into crypto are also into Bitcoin, right? They're just into your Bitcoin. But they're also into Bitcoin too, right? So I would say to somebody who's really down in dollar terms, again, it's hard to zoom out, but zoom out, focus on the long term, go to that all-time chart, flick that the log symbol, and just see where we've been and where we're going. It should give you a pretty good idea.
I think that's some great points. I love the Paul Tudor Jones or Bill Miller. I forget which one of them said it. They said when they were looking at the base of Bitcoiners, even when it was going down through all of the cycles, I think they said 80% of people held onto it, which is insanely high. Also highlighting something that Michael Saylor has said, like if you want to study an asset class, study the people that hold the asset or the bearers of the asset, whether it's real estate, Berkshire Hathaway stock, whatever. I've learned a lot from Warren Buffett and Charlie Munger. Obviously, I greatly differ from their opinion of what Bitcoin is. Maybe they're directionally correct on crypto, but I disagree with the Bitcoin aspect of it all. But, to their credit, they are the true value investors. And when people are investing in Berkshire Hathaway, 50, 60 years ago, and they said, you just want to hold this stock forever. They've done quite well. Yeah. Bitcoin's outperformed them as in like you said, over that, the small, or at least the last 10 or 12 years, for sure. But it's very, very funny to see the difference between the two.
Totally. And I love the point about study the individuals that hold it. I had this thought quite, more than once over the course of the past couple of weeks. Like, there was just the Pacific Bitcoin conference, right? And so while all this kind of storm was happening in crypto land, principled Bitcoiners were talking about the future of Bitcoin out in LA. Like, that is a pretty interesting signal right there. I thought about it, this week at work, right? And I'm in the office and we're getting off calls, helping people setting up private keys, all while, crypto is going crazy. Tom is writing an article about coin joins, and our carnivore work channel is going off about people, buying local beef. Like, there's the signal, right? So I do think the study the individuals that hold it is a pretty good point.
I think that's a great point. I was actually out in Pacific Bitcoin. I don't know if you guys were out there. If you were, I'm sorry we missed each other. But
I was not. No,
you were not. It was a good event. All in all, it was basically like what you were saying. The sentiment was very bullish. People were happy. No one was upset, even though our net worth has definitely taken a beating compared to a lot of other asset classes. I think the 2017, 2018 Bitcoiners, I give them a lot of props because Bitcoin and I guess crypto in general was taking a bath while everything else was hitting all-time highs. The stock market, housing, even bond traders were doing phenomenal in that time frame. So it must have been very, very tough basically for the world to tell you you're a bunch of idiots, only to, come back to new all-time highs in 2020 and rip. We've since fallen off that bandwagon, but I think everyone else is taking a bath and misery loves company. So I think now is the time to onboard people from other less beneficial asset classes to what we see in Bitcoin. Before I ask the final wrap-up questions, I have one more question for you both. I guess we'll start with Tom, but I guess what's the most exciting you see in the Bitcoin space right now? That could be a project that's already complete, like, Seed Signer or something you guys are rolling out, or something that's in the future. So Tom, I'll kick it over to you.
I'm pretty excited about Ben Carman's Vortex that just came out, which allows for coin joins in and out of Lightning channels. That might sound a little technical, but kind of really a lot of my focus is a project I'm working on right now to test the signing times and signing limitations of like Trezors and Ledgers and cold cards. Trying to, graph that out so it's like predictable for people. And stuff like that. So that's been really interesting and something that I'm excited to finish.
That's awesome. Tyler, how about you?
Yeah, this is I saw this, prepping for this call and talking to you, Chris. I was thinking about this, thinking really hard. I'm like, there's so many to choose from. So obviously, like, there's not just Lightning anymore, right? There's projects within Lightning. There's there's Fedimint, and there's a Chaumian Mint eCash projects that are really cool. There's on-chain stuff that's still cool. Output descriptors and standards around that. There's the kind of these just really interesting projects all around. I think what I'm really excited about is the advancement of QR code based PSBT signing. I think that's pretty awesome. I do think that, and I'll lump in NFC in there as well, right? There's technical advancements that are coming to Bitcoin tools that are a little bit more, I guess, user-friendly or approachable to the average Joe or the average individual who might be scared of self-custody, but when they realize it's as easy as scanning a QR code or tapping something, I think that opens up an entirely new addressable market for self-custody and for Bitcoin tools. Yeah. So I'll leave it at that.
Yeah, no, that's really cool. I mean, I just built my seed signer last night and I was messing around with it. So that was very cool. Fediment's definitely on there. And I saw Ben Carmen, I think he made a note of it, exactly what you're referencing, Tom, of coin joining or a collaborative spend coin join into Lightning channels, which is very, very cool. All right. So I guess, guys, I want to say before I wrap things up here, thank you so much for coming on. It's been a pleasure. Before I let any of my guests leave, though, I asked them 3 very quick questions. So first one is, what's the biggest investment mistake that you've had in your life in either business or personal investing? I'll kick it over to you, Tom, to go first.
Okay, yeah. I guess my answer is kind of cheeky, which is that I think saving your wealth in dollars is an investment decision. That's a big mistake. And I think that so I would call that my biggest mistake. If I had started saving in Bitcoin in 2009, I'd be pretty well off right now. But you know, that trend is going to continue. So yeah, that's the best I got.
All right, I like it. Tyler, how about you?
Yeah, the biggest for a Bitcoiner, you know, the first best time to buy Bitcoin was like 10 years ago. The second best is right now, right? So my biggest investment mistake was probably not buying Bitcoin earlier. But also, I think to be more realistic about it, I'm going to say my graduate school education, I think was a pretty poor investment on my part looking back on it. I think that fiat degrees and the traditional education system really isn't worth it for the tuition bills that are coming towards a lot of students in America right now, and I guess even around the globe. I think you can get a very principled education through open source tools, through something like YouTube even. So I do think if I could go back even about 7 years or so, I'd rethink that decision pretty hard.
Yeah, that's a great point, Tyler. And we actually have a bunch of college dropouts at Bitcoin Magazine, my company, and I have the utmost respect for them. They work so hard. The degree doesn't really mean anything. I mean, they do great work for us, and
Right.
no one would even know that they're quite literally some of the leading experts in Bitcoin, whether it's the technology and all of this, and they don't have college degrees. So I completely agree. I don't regret my degree, but in hindsight, it's always 2020. Like, I think I'd still do it again, but if I was in their shoes in today's day and age, I would hope that I would take the path that they took of dropping out. All right. So what's your favorite book, podcast, YouTube channel, or website? Some people like to blast and list all of them for related to Bitcoin. If you just want to give one of any one of them, that's fine. Tyler, I'll start with you.
Oh man. So Bitcoin specific book, podcast, or website?
You could do one of both. So let's do one Bitcoin related one, and then either one self-help or just investing one in general.
Oh, okay. So for books, I actually really like The Seventh Property by Eric Yates.
It's a great one. Yeah, I haven't had a chance to read it, but we've talked to him a bunch, and I love Eric.
That's like a very underrated Bitcoin book, I feel like. Eric has some very great thoughts written out very well in that book. So I will say that on the Bitcoin side. And then on the non-Bitcoin related book, I am a big fan of science fiction. Snow Crash is like a classic. Love Snow Crash. If you're interested in getting into science fiction, something like Snow Crash or Neuromancer, like the sci-fi classics. If you want to dip your toes into fiction again, I think that's a pretty good place to start. Neil Stevenson is amazing. For podcast, I really do like Tales from the Crypt. I've been listening to TFTC and Tales from the Crypt for an incredibly long time. Great actionable information, the rabbit hole recaps every Thursday, the interesting guests. It's just discussion that you can throw on when you're going on a jog, or driving your car, mowing the lawn, grocery shopping, and you can listen to actionable content about Bitcoin. So that's fantastic. Non-Bitcoin podcast, Tom has heard me say this so many times. How to Take Over the World is a great podcast.
I've not heard that one. I'll have to write that down and check it out.
Yeah, the host does, he only releases about 2 or 3 episodes a year, but he spends a very long amount of time reading biographies and autobiographies of great individuals throughout history, and then we'll give a really long form episode about the life of that individual. So Julius Caesar, Thomas Edison, Nikola Tesla, Steve Jobs. It's pretty fantastic. I mean, there are common traits amongst all these individuals that it's kind of cool to look back on. So
are they a little narcissistic, or you don't want to, that's for the listener to decide?
They are a little narcissistic. They all seem
enough.
to have weird diet trends, a little narcissistic, very much so, like burning the midnight oil, always obsessed with what their craft is. I'm waiting for him to do one on Satoshi Nakamoto. I think that'd be pretty interesting.
That would be fascinating. Tom, same question to you. You can list as many or as few. I love it when people give me the laundry list of all of them, but any book, podcast, YouTube or website, Bitcoin, and personal one if you want.
Okay, well, first of all, I'll say that I've also started listening to How to Take Over the World.
I got to really
brought it to my attention, and yeah, I've been enjoying that one. TFTC, I just want to throw out a note there that if you're ever listening to TFTC, that intro music and everything, Tyler created that. So
that's awesome.
That's a little bit of trivia. I would say, like, I love to shout out the We Study Billionaires podcast with Preston Pish, because that was really, I credit Preston and that podcast with orange pilling me back in 2020. So I always like to give credit back to him. And also that podcast, they still do traditional finance stuff as well. I liked that podcast for traditional finance stuff before I became completely obsessed with Bitcoin. As far as books go, I think I haven't read the Seventh Property yet, but the Bitcoin Standard is a really good go-to. I think that book has perhaps orange pilled more people than any other book. It really just breaks down, how to think about money. The first quite a few chapters aren't even about Bitcoin. And then everything falls into place, understanding why Bitcoin is the best money in the universe. So yeah.
I think that's a great list. Guys, it seems we've concluded the end of this. So before you guys go, thank you so much for coming on. But where can someone go to learn more about you guys or what you guys do at Unchained Capital? I'll start with you, Tyler.
Awesome. Yeah. Thank you for having us on. This was awesome. I'm going to add, add you to the Rolodex of podcasts. Want to make sure that we get the word out about what you're putting on here. It's really good to talk to Bitcoiners, especially coming from Bitcoin Magazine. Like, that's awesome. Really respect the team over there.
Thank you so much.
Yeah, of course. No, this has been really, really fun. For me personally, on Twitter at clockwork_prior on Twitter, somewhat active on LinkedIn, but not as much. Twitter seems to be the place to be these days. And then from an Unchained standpoint, unchained.com. We have a pretty awesome blog that we're actively building out with not just Unchained Vault content, but Tom has a great UTXO series on our blog. We have interesting technical content. So unchained.com, our blog, and then also our concierge service is really worth checking out. If you're at Thanksgiving dinner and you want to, you want your friends and family to be on multi-sig and hold their own keys, we're just a couple clicks away. So
definitely. Tom, kicking it over to you.
Yeah, thanks, Chris, for having us on. I think this is a really fun episode. And yeah, unchained.com obviously is the place to find out more about our services. If you want to keep up with what Tyler and I are just doing individually, like blog articles, videos, podcasts, stuff like that. My handle is at Tom_Honzik, just my name. And I always post the things that I'm working on there.
Thanks so much, guys. Thank you, everyone, for listening. This was episode 77 of the Amateur Investors Podcast. I want a huge thanks to Unchained Capital, Tom Honzik, and Tyler Campbell. We'll catch you on the next one. Have a good one, guys.